Some of you might know, we made a pretty significant announcement a couple of days ago, and Tim has flown back all the way from Europe just in time for this event to tell you all about it. Tim?
Great, Schwark, thank you. So good morning, everyone. I'm MasterCard's Chief Product Officer. My name's Tim Murphy. Very happy to announce we put out a press release last week that MasterCard has acquired Truaxis. Very happy to be part of the Truaxis team and for Truaxis to be part of the wider MasterCard family. We've done this transaction really for three reasons. One is we think there's enormous power in combining payments and the payment network capabilities that we have with the leading rewards platform that Truaxis provides. We think we can create a lot more value for issuers, financial institutions, for merchants, most importantly for consumers. Second, we think the card-linked offers model, in which Schwark and his team have been real leaders, has got a lot of room to grow in the future, cut through the clutter, deliver better value. And finally, we think this is a great, exciting platform with an awful lot of strong capabilities. And in order to get right to that in the time allotted, I'm going to turn it back to Schwark. So welcome and thank you.
Yeah, we're very excited to be part of the broader MasterCard family, but we have not slowed down the innovation pace. In fact, we're going to be launching a new piece of functionality today that helps you further improve your bottom line by leveraging transaction data in a whole new way. We want to talk about customer profitability analytics. Let's see how that works.
Great, thanks, Schwark. So one of the key things we've done with the profitability analytics module is we've extended the analysis that we do on the customer's transaction data stream to look at a whole new set of FI-centric transaction line items. So for example, you can see, we have check transactions, we have direct deposits, we have bill payments, overdraft fee, monthly service fees, et cetera. These are the building blocks of the profitability analytics module that are really instrumental in helping us determine which of your customers are profitable or unprofitable. To give you a better feel for how this works from an FI perspective, I'm going to switch over to our FI-facing dashboard, which now has been extended to include a profitability analytics section. We'll start on the customer segmentation analysis piece. So what you're seeing here is a high-level overview of how a given FI's customer base segments into three different categories. Currently profitable, potentially profitable, and unprofitable customers is denoted by the green, the blue, and the orange segments. So your profitable customers, as you can imagine, are the ones you want to retain. You want to continue to give them offers, incentives to do business with you. The unprofitable customers, on the other hand, need to be managed. You want to mitigate your exposure to that segment over time. And your potentially profitable customers are an interesting mix. They are not currently profitable based on their revenues, expenses, but there's something about their transaction data that gives us a sense that there's a chance to make them profitable. For example, to move some of their banking services into the same provider where they have their host DDA account. So now some of you may be thinking, well, how do you do this? How do you actually quantify profit? So the key is that we look in the transaction data stream for key revenue and expense drivers. I'm going to flip to the revenue analysis chart to give you a sense of how this works. So as you can see, there are a number of different revenue sources that are identified here for this FI. So things like overdraft fees, float, interchange from debit card transactions, et cetera. The chart on the left provides a visualization of how those revenue sources break down by total dollar contribution. And on the right, we can see the sort of number of customers that contribute to each of those respective revenue sources. So this helps you see certain things like, so even though a minority of your customers incur overdraft fees, it represents a good chunk of your revenues as one may expect. So, we of course recognize that not all FIs have the same product offerings. They don't all have the same underlying economics. So we certainly allow for a rich configuration ability. So I'm going to switch now to the configurations page. And here you can see a number of sort of default revenue sources that we provided as part of the application. An FI has the ability to add and configure additional sources if they like. They can customize the values that are used in the underlying calculations for how revenue and profit are calculated. It's worth noting there are additional customizations that aren't shown on this particular screen. For example, just like we do with revenue, we also have a parallel track of identifying expenses for an FI. So things like how much interest are you paying to your customers in interest-bearing accounts, the cost of processing checks and bill payments, overhead. Again, an FI is able to configure these to match their specific FI deployment, and they're able to configure the values as they make sense. So now hopefully you have a little bit of a better sense of sort of how the revenue and expenses work. Let's talk a little bit about potentially profitable customers and how we can help with profitability. So one of the things that we also do is look for opportunities within your customer base to drive better bottom line performance. One of the key opportunities is finding segments of customers that are using a third-party banking provider for a service which you deliver. So for example, in this orange bar here, or the green bar here, there's a large segment of customers that have a held-away mortgage, which is something they could be doing with this banking institution.
Some of our current customers are actually using a module that we sell called the cross-sell module. We haven't demoed that at this conference in the past, but this entire profitability analytics module actually ties very cleanly into the cross-sell module as well. Let's see how that works.
Sure. So I'm going to create a campaign. This will allow me to automatically create a campaign, in this case for my held-away mortgage customer segment. You can see here things like the reach and the opportunity of this segment. Now, I've created the segment. I need to define a campaign that's going to be used to target that segment. I've previously created a set of banner ad campaigns that basically highlight the mortgage products that my FI offers. I'm going to target that against this segment, which we just created through the Profitability Analytics module. And lastly, I'm going to define the duration for this campaign to run. For example, for Q4, I'm going to save this. So what I've done in just those few steps is I basically created a new campaign that is going to target customers that have a held-away mortgage, as this particular customer does with an external payment to Bank of America. So on a future visit to the online banking website, this customer will now, for example, see this banner ad here that shows at the top, which, again, is all about making an understanding of which of your customers have the opportunity to increase their profit and their bottom line, making it very actionable and easy to execute on.
And all of this is available through the same integration we've already done with the single line of JavaScript in some cases, or if you're a current customer, it's automatically available through the integration that's already been done. We're also excited to be part of the bigger MasterCard family. Tim?
So Schwark, you see the value for financial institutions in this kind of program. We think by, again, taking the capabilities that the Truaxis team can bring, putting them with our great relationships around the world, will deliver something of real strength. Thank you very much.